In their latest artificial intelligence and machine learning report, market research firm PitchBook documents a sharp reduction in investment in AI startups in the first half of 2022, a time of rising inflation and interest rates. Venture investors are tapping the brakes on AI amid rising economic uncertainty. This is because investors now believe that AI is less of a sure thing than it was just a few years ago. One reason for this is uncertainty about what will happen to interest rates, which have risen significantly over the past year and show no signs of slowing down. Interest rates affect everything from how much people can borrow for their homes or cars to how much companies can charge for loans, which impacts their ability to grow their business further, or even stay afloat. This delivers bad news and highlights categories that have continued to hold venture investors' interest, and those that haven't. Funding for AI startups during the first 2 quarters of 2022 dropped 20.9% from the same period last year. It fell 27.8% from the first quarter, faster than information technology as a whole, which fell 21.6%. On the bright side, funding for the year, $48.2 billion in the first half, is on pace to beat the total for 2020, $65.3 billion. The first half of 2022 was a tough time to be a startup in the AI space, but the second half of the year looks to be much better. Exits in the first half of the year totaled $27 billion. 2021 saw $144.2 billion in the same period and $200 billion for the full year. Over half of venture investment in AI in the second quarter, $11 billion out of the $20.2 billion total, went to applications such as drug discovery, security, and sales and marketing. Startups that specialize in cloud-based AI were hit hardest. That category's funding is on pace to tumble 87.7% in 2022 relative to 2021. Despite the gloomy numbers, the authors of the study reject characterizing the current period as an AI winter. They expect investments to rebound from around $175 billion in 2022 to over $350 billion in 2025, driven primarily by advances in multimodal AI, general-purpose models, and synthetic data. AI is experiencing a resurgence, with total investments growing from $175 billion in 2022 to over $350 billion in 2025. This is driven primarily by advances in multimodal AI, general-purpose models, and synthetic data. AI funding is slowing down, but not everyone is suffering equally. In a separate analysis, CB Insights determined that AI funding would fall by 21% each quarter in 2022. Similarly, it found that the losses were not uniform. AI startups in healthcare, financial technology, and retail, areas that have a solid track record, have maintained their funding levels better than other, more speculative fields. Investors have pulled back their funding for startups, and there are a few reasons why. One of the biggest is rising interest rates. When credit becomes more expensive, riskier investments become less appealing. Investors are also wary about the threat of recession, as well as inflation. With so much uncertainty in the air, it's no wonder people are backing away from riskier investments. This means that companies who focus on proven applications and markets will likely continue to prosper, but competition will probably get even stiffer as vendors are pressed to demonstrate that their offering is superior.